All right, let's get into it. Today, we're kicking off a quest, a journey to transform your financial future. Think of this as your personal guide to building wealth, and trust me, your adventure starts right now.
So first things first, let's tackle that one huge myth that stops so many people before they even begin. This idea that you need a giant pile of money just to get in the game. You know the one I'm talking about. But what if I told you that's just not true?
Yep, you heard me right. This whole journey, maybe the most important one of your financial life, can actually begin without a single dollar of investment money. The real ticket to get in isn't cash, it's just making the decision to get started.
Okay, so like any great adventure, you need to prepare. You wouldn't just start climbing a mountain in flip-flops, right? Well, investing is the same. You need to build a solid financial foundation first. This is us setting up base camp.
Before you can even think about building wealth, you have to play a little defense. Your number one enemy? High interest debt. Things like credit card balances. Seriously, trying to outinvest a 20% interest rate is like trying to run a race with your shoelaces tied together. You just can't win. Your second move is your shield, that emergency fund. We're talking 3 to 6 months of living expenses stashed away so that one unexpected car repair doesn't force you to sell your investments at the absolute worst time. So, once your defenses are up and your foundation is solid, now we get to the fun part. It's time to assemble your financial toolkit. And I want you to stop thinking of investments as lottery tickets. They're not. They're specialized tools, and each one has a specific job to do in building your future. And here they are, the main tools you'll be working with. You've got stocks, which is basically owning a tiny piece of a company. Then there are index funds, which are amazing. They're like a bundle of different stocks all packaged together for you. We've got REITs, which let you get into the real estate game without having to actually buy a building. And yeah, even things like gold for a bit of stability, or crypto if you have a high tolerance for risk. Every single one has its own purpose. And this table just breaks it down really nicely. Looking for big growth potential over time? Stocks are your engine. Want to spread out your risks so you're not putting all your eggs in one basket? Index funds are perfect for that diversification. And REITs, they can be a great source for steady income and a little stability in your portfolio. See, it's all about picking the right tool for the job you want to do.
Now, for anyone just starting out, this is kind of like the ultimate multi-tool. A mutual fund basically means you're hiring a professional, someone whose entire job is to manage investments. You buy in and you instantly get diversification and an expert eye watching over your money. That is a huge advantage when you're just getting your feet wet.
Okay, now we need to talk about the magic. Seriously. This isn't just another tool. This is more like a law of physics for your money. It's going to become your most powerful ally on this whole quest, the power of compounding.
This quote just says it all, doesn't it? So many people get paralyzed trying to guess the perfect time to buy or sell. But that's a fool's game. The real secret, the way actual wealth is built, is by being in the market consistently over a long, long time. It's about letting your money do the heavy lifting for you.
And this chart shows you exactly how that magic works. See the first bar? That's your money, the cash you put in. But that second bar, that's the total value after compounding kicks in. Over time, the money you earn starts earning its own money. It snowballs. And as you can see, eventually the growth part can become way, way bigger than anything you put in yourself. It's incredible.
And if you want to put a number to it, historically, the stock market has returned about 8% per year on average. Now, of course, that's not a guarantee for any one year, but it gives you a really good idea of the powerful potential we're talking about when you stay invested for the long term.
Okay. We've built our foundation, we've gathered our tools, and we understand the magic of compounding. Now let's look at the map for the road ahead. How do we apply all this to the specific world of 2026?
So, what are the experts saying about 2026? Well, for starters, tech is still a huge engine for growth, no big surprise there. But here's a key shift. After some pretty wild years, a huge emphasis is being placed on broad diversification to manage risk. And third, people are focusing on something called risk-adjusted returns. What does that mean? It means it's not just about chasing the biggest number. It's about finding the best return for the amount of risk you're comfortable taking. It's about being smart, not just greedy.
And this really brings us to a fork in the road on our quest. You can take the path of the short-term trader, which is full of high risks, a ton of stress, and trying to guess what the market will do tomorrow. Or you can take the path we're on, the long-term investor. This path is about patience, consistency, and building real, sustainable growth over time. So let's just boil it all down. This is your strategy, your 4-point plan for success. First, diversify. Use all the different tools in your kit. Second, manage your risk. Be smart about it.
Third, keep your eyes on the long-term horizon, not the daily news ticker. And last, but honestly most importantly, stay consistent. That is the secret sauce.
And I really want you to remember this. Financial freedom isn't some finish line you cross one day. It's not a single event. It's the path you're walking. It's the result of all those small, smart, and consistent steps you take day after day, year after year. So, you've got the map. You have the tools. The quest for 2026 and beyond is laid out right in front of you. The only thing left to figure out is, what's your first step going to be?